It is a pleasure to share with you the results of our 2021 ESG survey, which is our sixth and the most comprehensive report we have published to date. Coller Capital has been at the forefront of integrating ESG into secondaries over a number of years, and we recognise that our platform has the potential to amplify the impact of ESG in our industry. Responsible investment in Coller's ESG processes seeks to take full account of the environmental, social and governance factors that might materially impact the value of our investments or that conflict with our corporate values. Since our first ESG report was published in 2016, we have noted a year-on-year improvement in the depth and quality of response from underlying portfolio GPs. Over that time, the trends that have stood out for me include the greater adoption of formal ESG policies by GPs across all geographies, the creation of more formalised roles and responsibilities around ESG, a focus on ESG in the investment process, the recognition that certain thematic ESG factors deserve additional attention, for example, diversity, equity and inclusion, and climate change. We believe in continual improvement and in giving full and proper consideration to the mechanics of ESG in our investment process. For us, ESG is integrated into all stages of the investment process, with a focus on our portfolio GPs. We have created a continuous process where we plan, execute, review, question, influence, engage and improve our whole programme, all informed by our overarching ESG policy and of course Coller Capital's corporate values, which are underpinned by our focus on a central core value, integrity. We integrate ESG into all our deals through screening and due diligence, manage bespoke ESG risks through deal monitoring, and manage big picture ESG risks through our fund monitoring. We work with LPs and GPs through our targeted ESG engagement, seeking to innovate through ESG to enhance policy and process, and influence the wider market through advocacy and outreach, while all the time ensuring transparency through regular yet balanced ESG disclosure. Over and above the annual GP ESG survey and other monitoring activities, we continue to undertake an annual screening of our fund's underlying portfolio companies using the RepRisk database. Our 2021 review once again highlighted that we have a well-diversified and relatively low ESG risk portfolio across all the Coller funds. In 2019, 56% of GPs responding to our survey said they were focusing on carbon footprint at the portfolio level, and rose in 2021 to 73%. The trajectory is clear. GPs recognise that they need to do something about their carbon footprint, but many are just at the beginning of that journey. We first asked GPs for their views on net carbon zero in the 2020 ESG survey, mindful of the wider market move towards a lower carbon economy. And half of responding GPs at that time said that carbon neutrality of portfolios was achievable by 2050. During 2021, the year of COP26, despite climate change and carbon neutrality being at the forefront of the political and economic agenda, net carbon zero commitments remained the least frequently addressed issues by GPs, having been included by less than 1/4 of respondents in their firm's ESG policy. Indeed, 2/5 of GPs view carbon neutrality as unachievable. We see that as a call to action for us as investors. This patchy take-up in many ways justifies our risk-adjusted approach to ESG, focusing on those transactions where we have some ability to exercise more meaningful influence, and engaging with our portfolio GPs where climate has been less of a focus. Advocacy is an important pillar of our ESG programme, and as a secondary investor, we are well placed to utilise our investment platform to reach out across the wider market and exert a degree of influence. We have continued to focus on climate initiatives. In our efforts to help tackle the climate crisis, we are working closely with the PRI-endorsed Initiative Climat International, ICI, the Science Based Targets Initiative, and CDP, the former Carbon Disclosure Project. As signatories to CDP, we have played a role in promoting greater disclosure and awareness of private markets climate reporting. We have supported initiatives related to the adoption of science-based targets and joined a collaborative engagement for private equity carbon disclosure. We believe that our pursuit of responsible investment as a business is very closely aligned with our strong sense of responsibility to our investors and to each other, expressed in our corporate values. We have a strong focus on diversity, equity and inclusion, numerous firm-level initiatives around sustainability, and strong governance around cybersecurity.
Our Diversity, Equity and Inclusion Committee, which reports to our Executive Committee, undertakes several initiatives to enhance DEI at Coller Capital. We are a founding signatory of ILPA's Diversity in Action Initiative, which brings together limited partners and general partners who share a commitment to advancing DEI in the private equity industry. At Coller, we host Women in Private Equity dinners and have launched a Women in Secondaries network in association with Aiken Gump. We speak on diversity at conferences and work with several business schools to promote private equity as a career choice. Coller has implemented flexible working policies across all our offices and has a firm-wide subscription to City Parents, an online platform which provides Coller's employees with expert-led webinars, podcasts, and support groups across a range of topics. The firm is partnering with 3 organisations, Sponsors for Educational Opportunity, Generating Genius, and Women Societies Alliance, all dedicated to providing access to investment careers for young professionals from diverse backgrounds. The firm has signed up to the 10,000 Black Interns Initiative, and in the summer of 2021, we onboarded our first intern through this program. We are also partnering with Out Investors, an LGBT+ investment professional network whose mission is to make the direct investing industry more welcoming for LGBT+ individuals. We are proud of the progress we have made as a firm on our DEI journey, but we recognise that along with the rest of the industry, there is much more to do, and we are committed to building on our DEI initiatives.
The firm first achieved climate neutral status across its own operations in 2019, and we retained this in 2020 and 2021. As with prior years, Coller Capital had its direct and indirect emissions independently measured for a 12-month period. A total of 1,375 tonnes of greenhouse gas emissions have been offset by investing in a climate protection project which supports the conservation of forests in Ecuador and Peru. We have an established sustainability team which is responsible for our ESG footprint across our offices, as well as our relationships with suppliers. Much of their work relates to the consideration of sustainability and ESG factors in respect of the procurement of goods and services, and for general building and facilities management. The time when firms could get away with a veneer of ESG are over. The steps taken to integrate ESG into a business must now be seen to be a true reflection of where the biggest issues, risks and opportunities reside. Many stakeholders, notably financial regulators, are fully focused on private markets participants and their ESG claims, a step we welcome. General partners need to be prepared to prove what we say about ESG integration is the reality, and we should be prepared to explain the approaches we take as they naturally evolve and change over time. I believe the several ESG reports we have produced over the years indicate that we are moving towards a more purposeful approach to ESG in our industry. But we must not be complacent, and that is why we will continue to focus on the mechanics of our investment process, as well as make the most of the opportunities that present themselves to us to engage in a meaningful way.